Hey everybody, it's your boy Sean McLaughlin, Options Sean on Twitter X. This is the All-Star Options Jam session for September 28th, 2023. This is a session where we review any action in any of our open trades in the All-Star Options service. We update some stops, we talk about some exits, we even hint at some new trades we've put on. All that gets covered in these weekly jam sessions. But before we jump into anything too deep, we got to drop the old disclaimer that everything we discuss here is for educational purposes only. Everything I'm doing here, I'm showing you what I'm doing with my money, and I hope that you learn something from following my process and seeing what I'm doing. So let's start at a high level. I like to start with just the big picture of where we're at. We look at the S&P, we look at the volatility index, and as you can see, S&P yesterday intraday broke some pretty significant levels there, got everybody freaked out. Now this candle here doesn't show the reversal that has happened late yesterday and into today. Is a short-term bottom in? I don't know. But who knows? But what I do know is that stocks are sloppy here. Certainly not an environment where we want to be getting aggressively long. And we haven't been getting aggressively long at all over the last few weeks. Most of the trades we've put on have been credit spreads and mildly bullish trades in spots, which we'll talk about. But this is where the S&P is right now. It's kind of in no man's land. So it's a very risk-off environment right now. And volatility index tells the same story. If you look at the VIX, we got close to 20. We kissed 20 just about. Oh, we didn't get quite there, but very close. Got very close to 20 yesterday before the reversal in the afternoon. Highest levels in VIX since May. Is this going to mean revert and come back lower? I don't know. We're heading into October. Scary things happen in October. I'm not saying it's going to happen this October, but we definitely have to be on our toes. So that's the backdrop that we're operating in right now. So let's talk about some trades that we exited since we last spoke last week. The first trade we exited was a long calls position we had in KB Homes. We got into this trade. We bought the October 50 calls for $1.45 back on March 29th, and looked like we got early, but then the market agreed with us, and we were able to sell half of our position according to our plan as we laid out when we published this post to our subscribers on March 29th. And on May 29th, we sold half of our calls for double what we paid, taking out all of our risk so that we had a free ride for the rest. And it was looking really good up until was it late July? This trade was looking like it could be one of our bigger winners of the year. But the market has rolled over, taking home building stocks with it. And on September 22nd, or on the 21st, KB Homes traded below our stop loss level, our updated stop loss level, and so we exited the morning of the 22nd. I was able to get about 55 cents for the calls, and hey, that 55 cents that I got on those remaining calls, that's pure profit, because remember, when I sold half of my position back on May 29th, I took all my original risk capital out of the trade. So the free ride meant that whatever we sold our remaining position for, that was profit. Not the profit we were playing for, not the profit we wanted, but hey, we'll take profits where we can take them, where we can get them, right? So we're out of KB Homes. Next up is GXO Logistics, ticker GXO. This was a bull call spread we got into back on July 7th. We bought the January 60 calls and shorted the January 75 calls against it for the bull call spread. We paid $5.25 for it. But as you can see, the market, while initially agreeing with us, since rolled over, tripped our stop, and we got out of that trade on the 22nd. Let me see, what was our exit price? We got out for $3.15. So not a total loss in the grand scheme of things. Those are the kind of losses I like to take. I size all of my positions, as you guys know. These debit spreads, I size them with the assumption that if I'm wrong, I'm going to lose everything, right? That this is just going to go to a zero. And I size the position such that if that happens, no big deal. That's just, that's the cost of doing business. It's just no more than 1% risk of my trading capital. So whenever I lose less than that, that's a good thing. So we got out for $3.15, but we are out of GXO. MasterCard, this one was a quick one, quick in and out. We got in on on September 18th. We bought a bull call spread in January options. We bought the January 425 calls and shorted the January 450 calls. We paid $10 for it, but the market quickly reversed, and we exited for 565 on the 27th, which was just yesterday. So again, not a total loss, but a loss nonetheless. MasterCard, man, it was looking good. I was loving this setup, but the market had other ideas. All right, so I'm going to update some stops that on positions we have now. Here's Honda Motor Corp. This has been a big winner for us. We're still in this position. We are long October 30 strike calls. We got in on May 15th. We sold half of them 15 days later at double what we paid. So we sold half for $1. And we've been free riding the rest of the way. It's been a wonderful free ride. But here's the thing. These are October options. So starting next week, October will be the front month. We'll be in the month of October. And so we're going to start being really aggressive, tightening our stops. Right now, I'm updating my stop to 34. All right. But when we get into next week, I'm going to be even more aggressive. I'm going to trail my stop at a 3 to 5 day low. I'll use some discretion in that, and I'll update you guys in the chat, in the live chat room. Whatever the 3 to 5 day low is, that will be our stop as we head into expiration month, or as we head into expiration. But right now the stop's at 34. Assuming we don't get a major gap through, if we hit our stop loss level, this will be a profit, will be a nice profit, one of our better trades of the year. So congrats to any of you who are in this trade with us. Let's hope it keeps going, right? I would love to hold this thing all the way in expiration day, which means that the stock was going our direction the entire way. That would be nice. All right, next up is Tal Education Group. Similar story. This is October expiration options. We're long the October 7 calls. We got into this trade on July 13th. Straz and I were in Asia at the time we got into this trade, and we were liking some of the things we were seeing while we were in Asia. And so this stock got on our radar, and it looked like we were right, and then it quickly failed. But then it's re-going. Is that a phrase? Is that a word? But look at this move we're seeing in Tal. It's continuing to go. It's giving back a little bit today. No big deal. But if it gets up to 10, we'll be taking half of our position off and letting the rest ride. But for now, our stop loss has been updated to 7. But same story with HMC, Honda Motor Corp, is as we're getting into expiration, we are going to be aggressive, trailing our stop at a 3 to 5 day low going forward. So I expect this stop to move up significantly over the next few days. Again, I will keep you guys updated in the live chat as we go along. So that's it for updated stops. The last 3 trades here, I'm not going to get into the details. If you want the details, just head over to allstarcharts.com, hit into the members section for all of our options trades. Subscribers have full access to that. If you are not a subscriber, hey, shoot us an email, info@allstarcharts.com, and get yourself subscribed, where we go into details on every trade that we put on. We talk about why we're getting into a trade, what the technical setup is, what the trade is, how we're managing it, where we're taking profits, and where we get out for a loss. So Qualcomm is one of those trades we got into on Friday last week, a delta neutral trade. IWM, also a delta neutral trade. Got into this on Monday. And then just yesterday, Berkshire Hathaway, we sold some puts here. I'm giving this one was a free trade for everybody, so no need to be coy about it. But the November 3rd options, we sold the 350 puts for $5. And if we break below 350, that's our stop. We're out at 350, but we'll look to take our profits, and we could buy these puts back for $250. We paid $5. I'd like to buy them back at half of what I collected. So those are the new trades this week. All right, guys, like I mentioned before, if you have any questions at all about the trades, about how we manage the trades, or if you want to get involved in All-Star Options, shoot me an email, info@allstarcharts.com. Happy to help. All right, everybody. Have a great rest of your trading week. We'll talk to you next week. Take care.